My name is Michael Zuber, and I am a wealth management advisor with Investors Trust Company. I am also a certified financial planner. The purpose of today's presentation is really just to give a high-level overview for our clients about the CARES Act. I've spent a tremendous amount of time researching this topic. I have participated on continuing ed calls. I had read the bills. I had spent a lot of time on this topic, but that does not mean I know all of the answers. So if you do, feel free to chime in. There is a chat box available. Feel free to use that, and you can also ask questions, which I will see. I've also created 3 polls. I'm going to go ahead and give you the first one now, just kind of a fun little question that I'd like to see the answers to. So over the past month, have you done any of the following? Have you purchased excess toilet paper, non-perishables, or medicine? Have you bought a weapon for protection? Have you actively traded stocks? Have you had to cut your own hair? Looks like about 50 of you admit to purchasing toilet paper, non-perishables, and medicine, 55%. 45% have actively traded stocks. And then 18% of you have already had to cut your own hair. So that's wonderful. Reason for this question, not only is it kind of fun to see where everyone's at, but also I believe we're going to see a lot of studies being done about individuals' behaviors during this time. A lot of financial planners study behavioral finance, and a lot of psychologists study this. To give you an example of behavioral finance, one example is that the action bias, this belief that we have to take action. It's better to take action than just to sit idle. So for example, buying excess toilet paper, obviously some people might need toilet paper, but the vast majority of individuals were reacting irrationally and emotionally to this belief that they wouldn't be available, and therefore, and now they aren't, but generally speaking, we have this belief that we have to be in control of what's uncontrollable. In the soccer arena, when you see penalty kicks, a lot of times you'll see the goalkeeper jump from the left or right before the kick is even made. And studies have found that goalkeepers that stay centered before they react tend to have a twice as likelihood shot of blocking the goal than those that react beforehand. Anyway, so a nice little introductory there. I believe that there are elements of this bill that were part of the action bias by our government, and you'll see parts of that as we get into it. I'm going to read a few notes here, and then we're going to jump to the presentation. Disclaimer, this presentation, of course, is for educational use only. If you have any questions specific to your tax situation, I'd encourage you to speak with your tax advisor or your accountant. Today we're going to talk about the overview of the CARES Act. That's a Coronavirus Aid, Relief, and Economic Securities Act. This was passed into law on Friday, March 27th. This was the 3rd legislation passed by Congress. Rumor is they're working on a fourth legislation. I'd like to mention this now because it doesn't really fit in with the rest of my presentation because it has nothing to do with the CARES Act, but I've had a few questions already on this via email. As you know, federal and state tax withholding are extended until July 15th of 2020, which also includes extending 2019 IRA contribution deadlines. So it's my understanding that most, if all, of the IRA contribution deadlines have been extended, as well as defined benefit plans. North Carolina did waive the late filing tax penalty. However, the North Carolina 5% annualized interest on taxes owed will not be delayed. So that's very important to note. I'm going to ask another poll question just to get an idea of your knowledge on this topic. How many of you researched this topic or listened to a presentation on the CARES Act so far? Okay, it looks like the vast majority have received some kind of participated in training or research themselves, with 46%. 15% have not, and only 38% has just watched what they've seen on TV reports. The size and scope of this bill is just colossal. As you can see, there's a great number of impacts to this bill. It's estimated that the original bill was supposed to be $1 trillion and that it increased to $2 trillion. Now analysts are suggesting that the actual scope of the bill could be closer between $6 to $7 trillion when you take into consideration all the loans and grants. This can equate to about 10 to 30% of all U.S. GDP in a normal year, such as 2019. That's, if you divide it by the number of Americans for a $2 trillion bill, that's between $6,000 to $21,000 per American, regardless of age. Another perspective is that the national debt is currently $23 trillion. So we're only going to review the first 4 items on this list. However, I should note that there's a lot of items that aren't on this list. So, for example, there was $35 million sent to the Kennedy Center in Washington, D.C. There was another $7 million for cleaning the Smithsonian's. There was $25 million for the Capitol. If you can think of a cause, it's in this bill. The real question that a lot of people are asking is, how much money am I going to receive? And that's why I think this is kind of an interesting topic. Normally, tax topics, in my mind, income tax topics are not always that interesting, but how much we receive is going to be interesting to us. This is going to affect 93% of all Americans. It's called the economic impact payment. That's how the IRS is calling it. So if you receive any correspondence, if you even receive a check that says something like stimulus check relief payment, anything like that, then you might be concerned that that could be a fraudulent check. The economic income impact payment, when I heard Donald Trump speaking, or President speaking about this, it made me think of Oprah when she said, you get a car and you get a car. A large portion of this bill is about getting money back in the hands of the American people and business owners. If you look at the breakdown of the bill, there's a very small percentage actually that's devoted to hospitals and the medical field. You're looking at probably close to 30% at most for that field. I'm going to ask a question. I know that while I did say that this applies to about 93% of all taxpayers, I'm going to ask my last question, which is, are you expecting an economic relief payment from the federal government? So about 31% do expect a payment from this. 54% do not, saying that their income is too high, and 15% does not know. So how do you know how much you receive? Well, the maximum someone can receive as an individual is $1,200. If you're a married couple, is $2,400. In addition, if you have children, you can get an extra $500 for any kids that are 16 or under. So that's under the age of 17. Then you have to look at your income. So phase outs begin when the adjusted gross income reaches certain limits. What you do is you subtract $5 per $100 of additional income over the following limits. If you're filing single, your threshold starts at $75,000. If you are married filing jointly, it's $150,000. If it's head of household, there's another number out there. I don't have it off the top of my head, but I just wanted to focus for now on the single and married filing jointly. So for example, the maximum a married couple with 3 kids could receive is $3,900. How did I calculate that? Well, again, you take the $2,400 plus $1,500 for the 3 children. They're all under age 17. The maximum that someone could get with 3 kids is married is $3,900. But in this example, because their AGI exceeds 150, they'd only receive $1,400. So you take the 200,000 AGI minus the 150 threshold, divide that by 100, and multiply that by 5, and that's how we get our rebate. The good news is there are online calculators that can tell you exactly how much you'll receive. The only individuals that are not going to receive this is individuals that are behind on their child support payments. Steve just sent me a question, which is based on what year is the AGI based on? I'm going to answer that in the next on the next slide. How do I know how much the IRS? How does the IRS know how much to send me? Well, they're going to use the information from your most recent tax return. So if you have not filed your 2019 tax return and you've only filed your 2018, they're going to use information from that 2018. So let's hope it's up to date as to your filing status, as to the number of dependents you have, as to your income. In addition, how will I receive my money? Social Security recipients will receive direct deposit on file that they have with the Social Security Administration. The IRS will use direct deposit bank information that they have on file. And if neither apply to you, then the IRS will just send you a check to the address of record. And the last question in regards to the economic impact payment is, when will I receive the money? Well, it's going to be paid to you as soon as possible, 2 weeks, but it might be May. So Secretary Stephen Mnuchin came out last Thursday. It was a fairly interesting and entertaining press conference in that he said that they're going to start within 2 weeks. And I guess some of his officials in the IRS said it's probably not going to happen for a few months. And I think what they were talking about is the actual check mailings. Fully suspect that direct deposit could happen much sooner than the checks being mailed. So what happens if you moved or you closed a bank account? So as you can imagine, there's going to be a lot of people, even if it's just 1% of Americans, there's going to be a lot of issues with this. If you have moved, then you might want to quickly file Form 8822 with the IRS so they know your new address. I also understand the IRS will be establishing 1-800 numbers for individuals who didn't receive their recovery rebate check or they believe they received the wrong amount. In the coming weeks, the Treasury plans on developing a web-based portal for individuals that they can provide their banking information online so that their individual payments can be sent electronically versus checks. Just keep in mind, if you know anyone that can be easily manipulated, that you might want to let them know that the IRS will never email or call you to request financial information. I fully suspect that there's going to be a lot of fraud in this area, not only with people taking advantage of senior citizens, but also, or the elderly, but also people trying to log in and change your account information as to where the money should go. So be vigilant, try to stay on top of where your money is and where it's going. I fully suspect a lot of issues with this. So I want to mention a few major changes to retirement accounts that might affect our clients. Number one is the 2020 coronavirus-related distributions. These are distributions from your IRA or your employer-sponsored plans, such as your 401k or your 403b. Coronavirus-related distributions are allowed up to $100,000. You still have to pay ordinary income tax on this, but you can avoid the 10% early withdrawal penalty. In addition, you can spread the taxes over a 3-year period. Now, I don't believe you can say, I'm going to take 20%, this year and 40% the next year and, so on. So it has to be split up. I believe it's equally between the 3 years, and you're eligible to pay that money back over a 3-year period. So what would qualify as an IRS excusable coronavirus related excuse? Well, number one, you, your spouse, or your dependent has been diagnosed with COVID-19. You've experienced financial consequences as a result of being quarantined, furloughed, being laid off, or having worked hours reduced because of the disease. You've been unable to work because of childcare issues. You own a business that closed or operated with reduced hours, or you meet some other excuse that the IRS deems acceptable. The next item I think is more important to our clients, which is all RMDs are suspended for 2020. Let me repeat that. All RMDs, required minimum distributions, are suspended for 2020. In addition, first-timers get to suspend their delayed 2019 RMD as well as their 2020 RMD. So if you turned 70 and a half last year and you were procrastinating, or you did it on purpose, or you were planning on not taking your RMD until April of this year, then you also do not have to take it. But what if I already took my RMD out of my account? And we're getting a lot of those questions. Well, unfortunately, you cannot put the money back into your IRA unless it qualifies for 2 reasons. Number one, it can be classified for a 60-day rollover. Or number 2, the distribution qualifies as a coronavirus-related distribution, and we just went through those. What would qualify that? So number 1, let's say what that is. So you have once a year you're allowed to take a 60-day rollover from your account and put the money back in. I want to call it a temporary loan. A lot of times when you roll over from a 401k into your IRA, some people mistakenly have the check sent directly to them. They might put it in their checking account, but you have 60 days to put it back in your IRA account without having negative tax consequences. If this applies to you, then please do give a call or an email to your Investors Trust advisors and tell them that you would like to put the money back in your account. We will work with you. We're still trying to figure out kind of the logistics around the situation. In addition, if you have automatic payments as far as monthly or quarterly distributions from your IRA, then please do let us know and ask us to turn that off. And because if it's an IRA, we have to have everything in writing from you. But we'd be happy to turn off future distributions. Any questions on that? I know a lot of times when you take distributions, if you've already taken it, we've already withheld taxes and sent those taxes to the IRS or the North Carolina state. We probably and most likely would not be able to get those back, and you would have to wait to get a refund next year when you apply for your 2020 return. So I think a question I might get, and I'll just think of one, is why would I care to put money back into the account? Well, for those who I've done retirement plans for, I've talked a lot about sequence of return risk, and we've been talking about how this day was coming for a long time, and just want to make sure that we understand that it's the worst thing any retiree can do is sell when their stock values or their portfolio values are down. Okay, so individuals that typically end up selling when they're down typically do not meet their financial goals. Okay, so it's very important to try to protect that and at least try to defer your income taxes as long as possible. All right. Next slide. And this one, not a lot of words, but it's pretty meaty. If every single business and nonprofit needs to explore the benefits on this page. If you are employed, if you're actively involved with a church, if you own your own business, if you're actively involved with a nonprofit, then you need to pay attention to this section. Before I jump in, I also want to mention, don't forget about your local government and business grants. So for example, Carborough, Chapel Hill, Orange County, a lot of businesses like Cardinal Health, Truist, PNC Bank, and the North Carolina Rapid Recovery are all offering their own form of grants and or loans. So if development teams for nonprofits should be looking at this, I would encourage you. This is what makes this presentation interesting, really, because there's free money to be had out there, and there is a lot of money to be had out there. So if you own a business, if you own a small business, particularly those under 500 employees, then I encourage you to really pay attention and do your homework. The first item, and this affects the masses because 91% of all taxpayers no longer itemize, but there's now an above the line $300 charitable deduction. And while this does impact the masses, and it certainly has big impact for charities, this really isn't that big a deal for most individuals. If you're in the highest tax bracket of 37%, you'll probably only receive a savings of about $111, while those in the 12% tax bracket will only receive about a $36 tax liability savings. But what I really want to focus on are the next few items. One is the economic injury disaster loan. This is a $4.5 trillion loan for businesses, states, and cities that typically can't get financing by other means. Again, the $4.5 trillion is an estimate. At the end of the day, if every business owner applies for this, it's applicable. Loans up to $2 million are to be repaid over a 30-year period at 3.75%. Nonprofits get a 1% reduction off of that at 2.75%. Payments are deferred the first 12 months, and I think every business owner should look into this, even if you don't want or need the loan. And the reason is you can receive a $10,000 cash grant for any reason to be paid within 3 days. It'll be paid to you within 3 days. So there are a few other restrictions. I'm not going to get into every detail, but I know loans over $200,000 have to have a personal guarantee for businesses. Loans over $25,000 require collateral. And with all of these items, it's not just big businesses. It's sole proprietors, it's self-employed individuals, etc. So the big topic of the day really is this PPP forgivable loan. It's a paycheck protection program, and it's kind of a grant cloaked as a loan, in that if you use the proceeds as the government wants you to, then it's completely forgivable similar to a grant. If you don't use the money as it should be, then it's a loan that you have to pay back. This is fully guaranteed by the Small Business Administration, and it's being distributed out by banks and credit unions. I've known a few business owners and nonprofits I've been in communication with have had a lot of issues with getting their application submitted and received. We'll talk about that in a minute. It must be applied for by June 30th. However, the application window started last Friday, as I'm sure you're aware. I would suggest applying to this as soon as possible, starting April 10th. April 10th, again, that's next week. Independent contractors and self-employed individuals can start applying. I'd encourage you to apply immediately because, as the U.S. Treasury website says, there is a funding cap at about $350 billion. I understand Bank of America opened their application last Friday afternoon. By mid-afternoon, they had about 60,000 applicants for a total of $6 billion. I know, as many of you know, I serve on a few nonprofit boards. Each of them have calculated the amount of their forgivable loan for about, I'll just say $250,000. That's a lot of money. And both of them have had difficulties finding a bank to accept their application. I understand Bank of America has issued out a response that they are looking at issuing this money out only to businesses that have a relationship, an existing relationship with them that has a lending and or deposit relationship with them. So not only could this be a way for them to drum up revenue in other ways, but also to take care of their largest and most profitable customers. So not really surprised there. I certainly hope that the government considers expanding this federal cap, as I expect that this money probably within the next few days, if not week, might start running dry. This loan, if not forgiven, is a 1% fixed interest with a maximum of 2 years. I've been on a number of continuing ed calls that have said 10 years, but I'm going to say it's 2 years because that's what the Treasury website says. So who's eligible? Well, any company that has less than 500 employees. This includes sole proprietors, contractors, most churches and nonprofits. They have to certify in good faith that it's necessary given the uncertainty of the current economic conditions caused by this COVID-19. The maximum of the loan is a lesser of $10 million or 2.5 times your monthly payroll costs from last year. So how do you calculate that? Well, basically you take all your payroll costs, your salaries, your bonuses, your commissions, your 401k contributions from the employer, your HSA, health savings account, FSA contributions from the employer, your payroll taxes, your group health insurance premiums. You total all of that, you average it out by dividing it by 12, and then you multiply it by 2.5. Now, you cannot include any amount of compensation for any employees that exceed $100,000. It's my understanding that can be all pro rata, so you don't exclude every employee that makes that amount. It's just a pro rata amount. And the forgivable portion of this loan equals the amount spent on the next week's for, again, your payroll costs, your rent, your utilities, etc. However, the catch is you can't lay off your employees. You've got to keep the same number of employees, and you can't reduce their compensation by more than 25% if they make less than $100,000. So the whole point of it is to keep people employed. In some cases, if you rehire people that have been laid off, it's my understanding you can still be eligible for this forgivable grant or loan. So that's the PPP. Yep. So retirement benefits are included in that. Healthcare costs again are included in that. This is a big deal. I mean, this is free money that typically is not issued out to small businesses, especially to sole proprietors. So I understand that sole proprietors and the self-employed may have to provide additional documentation as proof. In addition, every business is going to have to show payroll costs. You can't just make these numbers up, so you might have to submit additional documentation as you're applying for these loans. The next few, certainly, I want to mention, but I'm not going to get into details. So Jim is asking, can the sole proprietor use a seasonal approach to the payroll calculation? So you bring up a good question here, Jim. It's my understanding what I just explained to you is for companies that have been in existence for last year. And I understand there are different calculations that can be used for seasonal style companies. So I would say yes. If anyone else knows the answer, feel free to chime in. I know we might have a few attorneys and CPAs on the line as well. But generally, I would say yes to that there's going to be some form of, I know for business in general, seasonal approaches to the calculation. Good question. All right, so there's also the employer retention credit. I'm not going to jump into this that much because frankly, I don't know why you would apply for this unless you couldn't get the PPP, which is essentially a $5,000 refundable payroll tax credit against employment taxes. This most likely will affect some of the larger businesses who didn't qualify for some of the other programs. And to be eligible, the government would have required to shut down at least partially your business operation. I think that might have qualified considering North Carolina is a work from home, except for essential businesses, or you had to have had at least one quarter of decreased revenue from the same quarter in 2019. Let's see. In addition, there's also the option to defer your payroll taxes as a company. You can defer the 6.2% Social Security payroll tax for up to 2 years, but not your Medicare tax. It's important to note that you cannot receive the PPP forgivable loan and these other two items. It's one or the other. But I understand you can apply for the economic injury disaster loan and the PPP at the same time. The $10,000 grant cannot be used for your payroll expenses if that's where you're using the PPP loan for. So these are just a few other notable provisions. Unemployment benefits have increased by $600 a week. Again, I said that correctly, that unemployment benefits have increased by $600 a week. So jobless workers are going to receive an extra boost from the federal government of the $600 in addition to the state aid that they might receive. There's what's called the pandemic unemployment assistance. This is unemployment for individuals who do not qualify for other benefits, such as the self-employed workers, again, independent contractors who typically would never even qualify for unemployment benefits. So in the past, the line of thinking is we would not allow self-employed individuals to apply for unemployment because all they would do is just lay themselves off and then then qualify for unemployment. The government has figured out a way, at least temporarily, to hopefully get around this issue. I'm sure that, again, there's going to be more documentation required for those who are self-employed. Unemployment benefits, which generally do run out within 6 months of most states, can be extended for an additional 13 weeks. And any questions on the unemployment? I know most of our clients are retired, so this really doesn't apply that much, but Bob Fontana had sent out, and our investment team had sent out this morning, and the unemployment numbers, and it was quite staggering. I believe it said close to 10 million unemployment claims in America currently. So fully expect that this will apply to more individuals. Your student loans, you can defer your student loan payments until September 30th. There's been a lot of misinformation out on the internet, not only with the media, but also even on government websites. On the government websites, for example, it says that they will automatically turn off your student loan payments, so they will not pull your money to pay the student loans until this is over in October. However, I've participated in a number of continuing ed calls, and I've listened and read that you actually should go and turn it off yourself. So I understand if any reason the payment goes through, you can request a refund, but it's important if you have any kids or grandkids that are paying student loans, I would encourage you to tell them to just make sure it doesn't go through, to turn it off. There's no reason why they should make the payment. It does defer the loan, but it doesn't increase any penalties or interest, etc. There's no accrual of the interest during this time period. And on that note, I'm actually going to exit the slide here because I just want to show you something. And I forgot to mention this earlier. We got the question about our IRA contributions delayed for 2019. And here's the IRS website. And let's see, somewhere on here, it says on the IRS website, you can make IRA contributions up until April 15th. Okay. Again, on the IRS website, I just pulled that up today. Again, on a different page on the IRS website, it says IRA contributions are extended to July 15th. Okay. So they have obviously not had time to update that. And maybe they don't plan on it, but I just find it interesting that there's a lot of misinformation out there that we're seeing. So next item is over-the-counter medication and menstrual care products will now qualify for HSA and FSA medical expenses. It's my understanding that everything in this bill is temporary, so it's only going to apply for this year. If you know otherwise, then please do speak up. I certainly don't have all of the answers, but and I'm not seeing any questions, but so it's my understanding that this is not a permanent change for over-the-counter medications and menstrual care products permanently qualifying for HSA and FSA medical expenses. I did read through the bill. I did try to find more answers onto that, but I didn't. And I think it's safe to assume, since everything else is pretty much temporary, that is temporary as well. Medicare beneficiaries will receive at no cost the COVID-19 vaccine, again, whenever that does come available to Medicare beneficiaries. Any Part D recipients can request up to 90-day supply for medications, whereas in the past you might have been restricted to 30 days. I understand there's also changes in regards to, there's more leniency in regards to telehealth services being pre-deductible for HSA eligibility. The next thing I find quite interesting, and I'm not going to go into every detail, but a lot of people, I've not seen a lot of information out on the news about this, but non-payment tenant evictions are now banned for at least the next 6 months. And in addition, 70% of all mortgages qualify for their, are eligible for at least a year of foreclosure relief. So I have an asterisk here for a reason. Obviously, there's a lot more detail we could go into this, but I'll just, on the evictions, again, that's non-payment evictions. Tenants can be evicted for other reasons. But this is a temporary nationwide ban on landlords evicting renters for not paying their rent. It applies for 6 months after the date in which the Federal Emergency Management Agency terminates the emergency declaration that the president made in March. So it's at least 6 months after this emergency declaration ceases. In addition, so the first question was, well, what about the individuals who are landlords that have a mortgage they have to pay? Well, in addition, up to 70% of all mortgages are eligible for the foreclosure moratorium until May 18th, with the option for the homeowner to request up to a year of forbearance from their bank. So what that means is if your mortgage is backed by a federal agency such as Freddie Mac, Fannie Mae, HUD, etc., then you are eligible to, frankly, not have to pay your mortgage up until May 18th, and you can always request up to 6 months and then an extension on that, so up to a year total on not having to pay your mortgage. The debt payments, again, are not forgiven, but the homeowner would need to work out a loan modification or repayment plan with their lender. During this time, the lenders are forbidden to contact the credit agencies about any late payments, and therefore it won't negatively affect your credit agency reporting or your credit score. Servicers are prohibited from charging fees or interest beyond what the borrower may have paid if they were making their payments as scheduled. Here's a list of hyperlinks of some of my different sources, the bill, of course, the IRS website, the Treasury website, and the SBA that all apply specifically to what we covered today. There's a PPP application. I understand a lot of the banks have their own online applications. The U.S. Senate summary, North Carolina Rapid Recovery, and then a mortgage and rent relief website from the government that I just spoke on. In addition, there's 5 handouts. I would encourage you, these handouts are not available anywhere else on as far as the hyperlinks. Let's see, I'm going to turn my camera back on, so if you guys have any other questions. This is our first attempt at a webinar, so I hope it went okay. We plan on having more webinars in the future about financial planning topics and kind of a market and quarterly commentary update from our investment team in the coming weeks. So look for an invitation for that purpose. And if you have any other questions, feel free to reach out to us. You can email itc@inbtrust.com or contact one of your advisors. Thank you, guys.